So at Boston Partners, one of the most important things we do is try to fundamentally understand businesses and the economics that they generate. I'm Josh Jones, a portfolio manager at Boston Partners, and I'm here to talk about fundamentals, which is one of the three key elements of how we think about investing in businesses. When we encourage our analysts to dig through business fundamentals, we think about it in a relatively simple sense. You can redefine the economics of a business into three important parts. How does the business generate revenues? What is the underlying cost structure of the business? And at the end of the day, how much cash does the business generate? Once you've done that, you can create a simple framework for understanding fundamentals of a business. The starting point is historically, what has the business generated in terms of economics? The analyst will go through that due diligence by looking at the historical financial statements of a company, its balance sheet, its cash flow statements, and its income statement, a lot of which we'll get on either annual reports or quarterly filings. And then we will also go through and do any related industry due diligence to verify, what's the structure of an industry, what does the market look like, who are the business's competitors. And the final step of the due diligence process is to speak with the management team to get their perspectives on both how the business is doing, how it's competitively positioned, what its future prospects are, and what's their strategy for running the business. One of the really important things that we do when we think about business fundamentals is to basically understand how a company, particularly the management team of a business, is deploying capital over time. How management teams return capital to shareholders, or they invest it organically in the business, or go out and do M&A. Typically, what we'll do once we're invested in a company is then consistently meet with them over the course of the year. In some instances, that may be quarterly. In some instances, it may be annually. It really just kind of depends on what the analyst thinks is relevant in the context of continuing to understand the business fundamentals. A great example of the fundamental research that we've done has led us into some of the semiconductor companies. You go back 10, 15 years ago, a lot of these businesses, the majority of their sales for the most part were focused on the consumer, so personal computers, mobile phones. It was a much more fragmented industry with lower margins and highly cyclical. What's happened over the last 10 years is that you've had quite a bit of industry consolidation, and they've broaden their end markets, supplying into autos, industrials, or broadly speaking, what's been defined as the Internet of Things. And this fundamental change for these companies over time has led to higher margins, higher returns on capital, and more complexity in their products, which generally produces an outcome where the companies that have been investing in R&D are earning higher returns. So if you study the financial statements of these businesses over the last 4 or 5 years, their margins and profitability levels have been significantly improving. So it's been critical to kind of understand the transition that they've been going through fundamentally. Boston Partners' investment process and philosophy is focused on what we define as the three circles. So these are businesses that are, in a simple sense, fundamentally strong businesses that generate high returns on capital. And we like those companies.